In this video, we're going to talk about Lucid Motor, trading under the ticker symbol LCID. It has been one of the most speculated stocks in the Nasdaq over the recent years. Some or many have said that it's going to be the next Tesla. Others believe that it's going to be a giant bubble that will eventually burst. But what everyone have in common is that they would like to see the company doing well, at least in the short term, to profit from it. As one of the heavyweights in the burgeoning industry, Lucid is also one of the few companies that actually has a product rolled out. As time went on, the company's stock, along with the big hypes and expectations, went through some huge roller coasters, and some are wondering if this is still a bandwagon that they want to hop on. In this video, we're going to look at Lucid and to see if the company still deserves to have a place in our portfolio. As always, if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links in the description. Before we begin the video, I'd just like to state a brief disclaimer, which may clarify what this video is about. What is presented here is what my opinions are. They're not investment advice and should be watched for entertainment purposes only. They may be able to help you make more educated decisions, but they shouldn't be used as the only materials for a decision making. Most of my analysis is done in the immediate past or just a few days before the uploading, and the price action on the chart may no longer correspond to what my video has, but the past trends will always hint about what the future may have for us, so in that sense it's still relevant. Also, the analysis will cover the stock comprehensively, so it'll talk about more factors than just the latest news or price actions. For instance, we might cover the company's financials, the stock market trends, the long-term perspectives, and the shareholder behaviors. All these factors are going to affect the timing, the quantity, and the actual decision regarding Lucid. Since most of my viewers are watching these videos for the first time, they should consider all these factors as well. So, with all that being said, let's begin with today's topic. So, Lucid went public in the height of EV craze in late 2020 by reverse merging with the SPAC CCIV. The market was very excited about this event back then because it marks the beginning of a new era for many shareholders who want to purchase EV stocks as early as possible. Back then, the only monolithic dominating company in the field was Tesla. And it seems that no one can stop the bullish tendency of not only Tesla, but of the industry as well. People were in a mindset believing that the bull market is never going to end because it hasn't really changed for almost 15 years. The only true alternative for Tesla at that time was NIO, and investors were looking for a domestic company with better oversight and perceived safety regarding their investment. So Lucid went public in 2020. It is a company with more than a decade of development as a private company, and it was able to prove to the industry that it is here to stay. We have to remember that the market mood was euphoric back then, and that there seemed to be no obstacle for what lies ahead. The current price action acts both as a major cool down for the market as well as an opportunity for more sustained development looking forward. Lucid's stock price went below $10 over the past few days, which is important for retail traders on a psychological level. Obviously, given the level of institutional ownership in this company, there won't be that much, I would say there won't be that much people trading in and out. With that being said, the fact that they're now below $10 means that the sell-off is probably not slowing down. So, Lucid stock went down by 11% over the past 5 days. This is mainly caused by the number of complaints that Lucid Air has received. The recent sell-off seems to be a continuation of what happened ever since the market began to turn earlier this year. Even if there have been recoveries here and there, sometimes lasting for quite a while, overall the tendency hasn't changed. So the stock is down 31% over the past month. And what this suggests is that the market doesn't have a lot of optimism in the current economic environment, and that Lucid Like Lucid needs to prove that it can improve its own product quality as well as the scaling capability, especially coming in 2023. If we look at the long-term tendencies of Lucid, it's not difficult to see that the bubble gave like a lot of hope to traders around the world, and that this initial hope, might have bursted. The market is no longer willing to blindly follow the latest hype. On one hand, the market doesn't want to persist on believing that a bull market based on assumption rather than actual production is sustainable. On the other hand, it cannot afford to sustain this trend when supply chain issues, doubt about Tesla, as well as conflicts, higher interest rates, and uncertainties have already been plaguing the real economy for so long. Like, it's out there. It's no longer something that we can put under the rug and to pretend that everything is right. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a rough patch for at least a couple of years. So the market has peaked twice in the past, and if the first peak caused pure hype, the second one triggered by like the rollout of Lucid Air, Lucid remains a company that has investment value in the years to come. The main question is, when is the best entry point? The long grind to lower price level is likely caused by the market trends rather than company fundamentals. So despite like the number of complaints, I would say that if the stock went down by 30% over the past month, it's not really because of Lucid Air. It's because, this is how people view this sector. So in that sense, things are not as alarming as they may seem. On the other hand, we should remember that sometimes those grinds, even if they don't have like any fundamental reason, they can last for a very long time and bring the stock to a very low price. Hyliion would be a good example of that kind of scenario. When we take a look at the company's financial, we can see that the company's profitability remains to be improved. It's encouraging to see that, it increased significantly from 97 million in Q2 to 195 million in Q3. On the other hand, the cost of goods sold increased as well, from $292 million in Q2 to almost 500 million in Q3. It's interesting to note that the cost of goods sold increased more slowly than the revenue, which shows that Lucid has been trying to control its expenses. Nevertheless, there are improvements to be made going forward. Another element to observe is the operating expense. I believe that those corresponding to fixed costs haven't really fluctuated that much, which might be a good sign, and in my opinion it is. Nevertheless, the company stands to lose about $700 million in Q3, which will definitely add up if we annualize this cash outflows. Regarding cash, the cash reserves is impressive from the outside, but if we think about it, given that it has a deficit operation, the fact that it has about $6 billion on the balance sheet suggests that unless the operations pick up significantly in 2023, we might see additional rounds of dilutions over the next couple of months and years. As for liabilities, the debt that Lucid took on has, generally speaking, gradually increased from below $2 billion to above $4 billion. Simply put, the liabilities provide financing to a company. They may provide critical cash inflows when the company needs to scale up the production. They do differ from equity sales in the sense that no dilution of ownership has happened, but there will be obligations to fulfill, such as the repayment of principal and interest. So, if the company fails to comply, it would be considered insolvent and Lucid would be liquidated. For the moment, I consider that the increase in debt level at Lucid to be normal. It's justified by the natural growth of its operations. But with that being said, it's not really a thing that we gotta keep an eye on for the long-term future, because this may involve going concern issues and cash pressure as well. Now, additional relevant aspects are related to the current ratio and the inventory turnover for Lucid. Current ratio defines the liquidity that a company has and how well they can meet short-term difficulties. This number has been going down over time, suggesting that Lucid will be short for cash or the equivalent assets in subsequent periods, or at least it might be. So we can't rule out the additional rounds of share dilutions just yet. The inventory turnover, on the other hand, is a measure of how quickly they sell their vehicles. The recent statistics show that Lucid has no difficulty selling Lucid Air, which is a testament of the brand's recognition and reputation, as well as the pertinence of positioning itself at the high-end segment. Overall, Lucid's financial figures paint a picture of a company that is growing its operations but lacks a little bit in terms of discipline in the cost control and needs to scale up its operations to start having positive operating cash flows. Now, let's also talk about the shareholder composition of Lucid, because it's something that's quite important to determine if the company is better for trading or investment. Lucid is currently held by institutional buyers for the most part, at 71.5% of the total float. That means that Lucid's volatility is going to be probably a lot lower than other growth stocks, mostly owned by retail traders. The reason why that might be the case is because institutional shareholders are far more diversified and don't mind the short-term volatilities. They also tend to stay in the stock for longer periods of time, which acts as a good sign because those of us who want to stay in the company for the long term would need this kind of stability. Regarding short selling pressure, Lucid has a sizable short position, around 5.2 million shares shorted, corresponding to about 22% of the volume. Now, in my opinion, this is probably not like a concerted short operation from institutional side. It's more like because a bunch of people believe that things are going to get rough, that the market valuation is going to get is way too lofty for a company selling luxury EV cars. But to this, I would say everyone would have their opinion, and I have my rights to not believing that the valuations are lofty given the current model. This is very important, given the current model and given the current technology and given the current mindset that people have about EVs. So, based on the analysis above, I would recommend to follow up closely to Lucid's price action to build up a position over the next 12 months in a more closely monitored dollar averaging down kind of strategy. With that being said, currently there's a high likelihood that the stock will continue to go down for the next couple of weeks. So I would tactically pause the purchase and to wait for a support to be found for at least 3 to 5 days before getting back in. So the maximum exposure I would recommend is between 3 to 5% of your portfolio.